Hello investors, welcome to our channel. Today, we're not just talking about Google. We're doing a full deep dive into its parent company, Alphabet. We'll dive deep into the money-making machine that funds everything. But most importantly, we'll analyze its multi-trillion-dollar bet for the future. Gemini AI. Is it the key to the next decade of dominance, or its biggest weak spot? We'll look at the company's strong finances, its almost unbeatable competitive advantages, and the risks that keep any investor up at night, from huge antitrust lawsuits to tough competition from Microsoft and OpenAI. The big question is, with so many chances and threats, is Alphabet still a smart buy for a long-term portfolio? Stay with us until the end to put this puzzle together and come to your own conclusion. Let's get started. Business model. Alphabet structure. More than just a search engine. Since 2015, Google has been reorganized under a holding company called Alphabet. This structure has two main parts. The first is the core, the money-making engine, Google. The second part is the portfolio of future bets, known as other bets. Think of it as Alphabet's innovation lab and venture capital arm, looking for the next big tech breakthroughs, the revenue engine, Google. Let's break down the Google segment, which brings in most of Alphabet's money and almost all of its profit. 1. Google Search and Other. The heart of Alphabet is still advertising on search. Companies pay to show up for users who are actively looking for products and services. This is a super strong and lasting business model based on what customers want. It includes not just search, but also money from ads in Gmail, Maps, and Google Play. 2. YouTube ads. Next, we have YouTube. With billions of users, YouTube has become a key advertising platform for brands that want to reach a lot of people and get them involved. Money comes from ads shown before, during, and next to videos. It's the second biggest helper for Alphabet's ad money. 3. Google Cloud, the strategic growth engine. This part goes head-to-head with Amazon's AWS and Microsoft's Azure, offering cloud services, data analysis, and very importantly, AI platforms like Vertex AI. For investors, this is a key point. Google Cloud is growing fast, and after many years of big investments, it's now making money, proving it's a strong pillar for Alphabet's future, bringing in money beyond just advertising. Strategy and business outlook. The decisive factor, Gemini and Alphabet's future. Now let's talk about what we believe will be Alphabet's main growth driver and most significant bet for the next decade, the Gemini initiative. Gemini isn't just another update. It's a fundamental strategic shift that puts artificial intelligence at the absolute center of Alphabet's entire ecosystem. For investors, understanding Gemini is understanding the investment thesis in Alphabet today. The strategy rests on three essential pillars. 1. Reinvention of core products. First, the reinvention of its most profitable products. Gemini is being integrated to transform the user experience. Search is evolving from a link engine to an answer engine, providing direct and intelligent summaries. In Google Ads, Gemini optimizes campaign creation and return on investment. And in Android and Workspace, it boosts productivity. This means products with greater engagement, defending and expanding their user base against competition. 2. Google Cloud as an AI powerhouse. Second pillar, accelerating the growth of Google Cloud. By offering Gemini through its Vertex AI platform, Alphabet isn't just selling infrastructure, it's selling AI innovation as a service. This positions Google Cloud to capture a significant share of the enterprise AI market, attracting customers looking to develop their own generative AI solutions on the most advanced model on the market. It's a clear competitive advantage and a high-margin revenue driver. 3. New frontiers and direct monetization. And third, the creation of new revenue streams. Alphabet has already started to monetize Gemini directly through premium subscriptions, such as Google One AI Premium. This creates a new recurring revenue stream. More importantly, Gemini opens doors to entirely new markets in healthcare, scientific research, and advanced automation. While these are long-term bets, the potential for disruption here is immense and represents the upside that long-term investors are looking for. Financial strength. In a changing market where money worries can shake even big companies, investors look for safety in one key thing: financial strength. Few companies in the world show this strength like Alphabet. To understand Alphabet's strength, let's start with its strong balance sheet. The most important part is its cash. In the last report, Alphabet had about $110 billion in cash and short-term investments. This huge amount of money acts like a shield when times are tough. More importantly, It gives the company's leaders amazing freedom to invest a lot, even when other companies have to pull back. Controlled debt. On the other side, we have what the company owes. Even though Alphabet has some debt, it's very small compared to its cash and how much money it makes. Its net debt is negative, which means it could pay off all its debts with just a small part of its available cash. This is the best kind of financial safety, the never-ending cash machine. The main business of advertising, powered by search and YouTube, is a real cash-making machine. Year after year, Alphabet makes tens of billions of dollars in free cash flow. With this financial strength, Alphabet can invest more than almost any other company in research and development and AI technology, get through tough economic times without having to cut important investments, buy promising companies to make its business stronger, handle losses from its other bets for years, hoping one of them becomes the next Google. Also, this financial strength is the base for the strong advantages that we will talk about next. Competitive advantage. Let's break down the three main competitive advantages that make Alphabet a true fortress in the business world. Understanding this is key to understanding the company's long-term value. 1. The first and most powerful advantage is the data network effect. It works like a virtuous cycle, especially in Google search. The more people use search, the more data Alphabet collects about what the world wants to know. This data feeds their algorithms, making search results faster and more relevant. A competitor starting today doesn't have access to over 2 decades of search data. It's an almost impossible barrier to entry. This connects to a second point, the high switching cost. Alphabet has built an ecosystem where everything works perfectly together. Your email in Gmail, your files in Drive, your memories in Photos, your route in Maps, all synced by the world's most popular operating system, Android. Leaving this ecosystem is inconvenient and time-consuming. This friction keeps users captive, ensuring a stable and predictable base for Alphabet. The second big advantage is YouTube's two-sided network effect. It's a powerful cycle that attracts both content creators and viewers. Creators go to YouTube because that's where the global audience is, billions of users. And viewers go to YouTube because that's where the largest and most diverse content library on the planet is. A new competitor would somehow have to attract both sides at the same time. It's the classic chicken and egg problem on a planetary scale. The third competitive advantage is at the forefront of technology, leadership in artificial intelligence. Their models like Gemini represent a very high technological barrier. But most importantly, this AI advantage is not a standalone product. It strengthens all other moats. AI makes search smarter, ads more profitable, and cloud services more powerful. And the fuel for this AI? The mountain of data they've collected for decades. Our first moat. Each advantage feeds the other. Risks and uncertainties. Let's break down the 4 biggest risks that threaten Alphabet's dominance and that every investor needs to keep on their radar before investing. 1. The regulatory net and antitrust threat. The first and perhaps biggest existential risk for Alphabet is the global regulatory net. The very dominance that creates its competitive moats attracts the attention of governments worldwide. In the United States, the Department of Justice has active lawsuits accusing Google of maintaining an illegal monopoly in both search and advertising technology. In Europe, the Digital Markets Act is already forcing the company to change how it displays its own services in search results. What are the real dangers here? Billion-dollar fines, which have already happened, are just the tip of the iceberg. The real risk is a court order for a forced restructuring, the possibility, however remote, of having to sell parts of its ad tech business. This would strike at the heart of its money-making machine. 2. The AI race and competitive disruption. For years, Google was the undisputed leader in innovation. But the rise of generative AI has changed the competitive landscape. Alphabet is no longer playing alone. Microsoft's partnership with OpenAI has injected new life into Bing and its entire ecosystem, creating the first real threat to search's dominance in over a decade. The AI race is incredibly expensive, and there's no guarantee that Alphabet will emerge as the definitive winner. Also, there's a fundamental shift in behavior. Younger generations are increasingly using platforms like TikTok and Instagram as visual search and recommendation engines. If search becomes less central in people's lives, Alphabet's main moat will begin to dry up. The trillion-dollar question is, can Gemini reverse this trend? 3. Operating costs and the money pit of other bets. leading the AI race comes at an exorbitant price. Building and operating the data centers needed to train models like Gemini costs tens of billions of dollars. Alphabet's capital expenditures have skyrocketed. This puts pressure on profit margins. Investors need to monitor whether the return on this massive investment will materialize in revenue and profit in the future. For now, it's an expensive gamble. At the same time, we have the other bets. Projects like Waymo, self-driving cars, are fascinating, but they continue to burn billions of dollars in operating losses each year, with no clear timeline for profitability at scale. The market's patience isn't endless. 4. Image, ethics, and execution risk. Finally, in an increasingly conscious world, image and ethical, ESG risks, are business risks. Generative AI is a minefield. We recently saw how AI models can generate problematic, biased, or simply wrong results. A big Gemini mistake, like the image generation controversy we saw in the past, can significantly damage the Google brand, which was built on trust and authority. Issues about data privacy, the ethical use of AI, and the spread of misinformation through its platforms are constant. One misstep can lead to a boycott by users and advertisers, as well as attract even more regulatory attention. Capital Allocation Alphabet has an excellent capital allocation rating. It shows good capital management, balancing smart investments, giving money back to shareholders, and keeping a healthy balance sheet. Smart investments. The company has a history of making good strategic purchases like Android and YouTube. Focusing on AI is still a top priority. Giving money back to shareholders. Alphabet has a strong program of buying back its own shares, which greatly reduces the number of shares out there. It also pays out dividends every 3 months. Company leadership. The way the company is set up, with Larry Page and Sergey Brin holding most of the voting power, is something investors should be aware of. However, the day-to-day operations are handled by Sundar Pichai. Antitrust rules for mergers and acquisitions. Because of all the attention from regulators, it's less likely that Alphabet will make big purchases in the near future. We've reached the end of our Alphabet analysis. And what did we find out? On one hand, we have a true powerhouse, a company with a balance sheet that's every investor's dream, with over $100 billion in cash and hardly any debt. It has incredibly strong competitive advantages, like the data network effect in search and the YouTube ecosystem, which feed into each other and are strengthened by its leadership in artificial intelligence. The excellent capital allocation with big dividends and share buybacks directly rewards shareholders. However, on the other hand, the clouds on the horizon are real and threatening. Regulatory pressure might force big changes in its advertising business. The competition in the AI race is the toughest in tech history, and the costs to stay on top are huge. One wrong step in how they use or handle AI could shake the trust they've built over decades. So, to answer our first question, is Alphabet a good addition to a long-term portfolio? The analysis suggests that for the patient investor, the answer leans towards yes. Investing in Alphabet today isn't just about investing in its current dominance in digital advertising, but rather a bet on its ability to lead the AI revolution with Gemini. It's a bet that its financial strength and competitive advantages are strong enough to withstand regulatory and competitive storms. The growth potential, driven by Google Cloud and new AI revenue streams, is huge. However, investors need to be aware of and comfortable with the significant risks that come with it. The final decision, as always, is yours. Weigh the facts, look at the risks, and decide if Alphabet's future lines up with your investment goals. Did you like the analysis? Give it a thumbs up, subscribe to the channel so you don't miss our next videos, and tell us in the comments below. Do you believe in Alphabet's future, or do you think the risks are too big? We'll see you in the next video.